before that, and she also said that in the coming year, perhaps we will see rural demand pick up while exports slow down. And that was a theme even Morgan Stanley highlighted when they upgraded Dabur today to an overweight. That, coupled with comfortable valuations and that inflation is perhaps on a decline, makes the stock fairly attractive. Dabur is a stock which is up 1.7%. But Prabhuda Leeladhar's bets include Safari, VIP, Lemon Tree in the hotel pack, home improvement. They're looking at Astral Pipes. And in the banking space, they expect NIMS compression going ahead, and money could be made in PSU banks, which are currently offering deep value. Rupen Rajguru, the head of equity investment and strategy at Julius Baer, is now with us. Thank you very much for joining us. It's a very special day. But, now increasingly there are a lot of skeptics in the market about whether India can continue to outperform, because historically, whenever we trade at high valuations, the current valuations are 20, 21 times, historically, we've seen the next year to be a year where equity markets have given you subpar returns. Would you give credit to this historical data? How would you approach the markets right now?
Okay, thanks, Rima, for having me. And before I get into that, wish you, Nigel, Prashant, and everyone at CNBC-TV18 family a very happy 23rd birthday, and for many more glorious years ahead. No, on your question, about the valuation, and you're absolutely right that at say 21, 22 times forward earnings, the returns 1 year down the line has been subpar. And if I were to add other parameters, wherein the Baer ratio, which is the bond yield to the equity yield ratio, that also currently is trading, above average. Also, if I were to add that on the price to book, because that is a better indicator than PE, because PE at times do tend to get skewed. On that, we are not, we are probably just at, or we are closer to the average. So that gives us confidence that it is that we are not in an extreme overvaluation zone. Having said that, as I think the earlier guest was mentioning, that we are from a global perspective, we have to see where India stands vis-a-vis others. So going ahead from here on, India is more a valuation call rather than a macro call, and it is exactly vice versa for global markets. So if there were to be some improvement in global macros, because we have seen the worst, you might definitely see the relative attractiveness of India come off. So net-net, I would say we are evenly poised, as we are in the current juncture. And probably if there is were to be a rally in the global markets, India will participate, but probably might underperform other emerging markets if there were to be a rally in emerging markets.
Mm. You're also saying that rural recovery theme is a tactical play. What gives you the confidence that rural demand will recover in the first half of the year? What are the signs that you are picking up from the ground?
Yeah, so that's an interesting question. And in fact, some of the pointers, if you pick up from the latest Q2 commentaries, people are talking about green shoots in the rural economy. We have seen I think the good anecdotes are the auto numbers, especially the two-wheeler numbers. So the post-festive season, the November numbers were also pretty strong. And if you see from the Rabi crop perspective, as well as the overall reservoir level which we have, and higher MSP prices, all augurs well for a strong business momentum in rural India. In fact, one of the NBFC which focuses essentially, which is a vehicle financier focusing on the rural India, in their latest commentary indicated very strong momentum and disbursement, and also very good collection efficiency. And also finally, next year will be a pre-election year. So typically we see also a lot of spending from the government, which will be focusing on the rural India. So all put together, definitely it makes a case for a comeback of rural demand, which has been tepid for last, say, a few quarters.
Okay. So on the subject of pre-election year government spending, do you anticipate government capex to pick up? And if yes, what is the best way to play it? Because I was looking at your thoughts. You like project execution companies more than the capital goods companies. Why is that?
So Rima, if you see here, We expect the government capex to continue. In fact, the budget, which will be now 2 odd months down the line, to again focus on capex. So the government financing, especially the tax collection, has been quite robust. So we expect that to continue. And now coming from a market perspective, what we have seen, the early cyclicals have seen a huge re-rating. So all the capital good company stocks have seen phenomenal returns, right? If you've seen last 1 year, they have all got significantly re-rated. And that's the typical story. The early cyclicals tends to do well. So now, in some of the project-oriented companies, specifically say BOT companies or some of the ham companies from a road perspective, I think that segment has been a big laggard. In fact, for the first 7-8 months, the government spending has been a little bit low out there, and they have not met their target. But recently, the minister also made a comment that they will stick to their full year plan of the total roads which they are going to build this year. So that means the next 3-4 months will be pretty strong. So from an NHI perspective, also now they had some bit of on their financing side, some adjustments were required. So now it is done. So now we believe the next 4 months, the order inflow will go up significantly, and all the companies there. So what has happened in that industry, especially on the BOT companies, there has been a good consolidation which has happened. The balance sheets are pretty good, and on valuations, they all are at probably sub 10 P multiples. So all it's a very potent combination for earnings growth as well as re-rating happening there.
Rupen, hi, afternoon. When we had you with us, I think early October last, you said that after a disastrous quarter for cement, that was Q2, Q3 should be better and it'll provide opportunities along the way. Now, last month of the third quarter in, what's your view? I mean, if you've tracked how things are progressing, and what's your view now?
Sorry, I just lost your line. So are you asked about cement?
Yes, yeah. Rupen. You were saying that maybe it'll offer up opportunities. Q3 should be much better. We had Anil Singhvi, a cement veteran, yesterday with us, who said much of the same. He said, we're the worst is behind. Now, degrees of improvement, of course, I mean, one can debate, but what's your own view?
No, you're absolutely right, Prashant. Like the quarter two probably was the worst quarter, as far as margins are concerned. It was probably at a multi-year low. And, we had impact of the higher input prices, plus as well as, the volume growth not coming through. Now we have already seen, the pricing of some of the input costs coming down significantly. In fact, case in point, the imported coal prices have come off significantly, and some of the other prices also, input prices have come down. And also there has been price hikes. And finally, what we are seeing also volume pickup. So net again, what I mentioned earlier, also in a pre-election year, the activity does tend to pick up. So cement as a sector, probably over next 2 to 3 years, we believe the volume growth in cement would be higher than the GDP growth. So from that perspective, it augurs well. And the supply side, while supply is coming off, but the catching up of supply will take some time. So net it creates a room for a better pricing environment. And since the margins are probably have bottomed out in the quarter two, it will not immediately shoot up, but yes, definitely we'll see the margins going up over next few quarters. So that should lead to also a very strong earnings momentum for the cement companies.
We've been asking this about these one-year-old newly listed companies, Rupen. We had Samir in the morning, Samir Arora of Helios, who said he's bought 2, he's considering buying another one. And others have weighed in as well. Maybe now, after all the price damage, one starts looking at them, if not acting immediately. Any thoughts, Rupen? And which ones in particular?
Prashant, here, I would look them more from how similar companies globally are trading and what's happening with them. Because the end of the day, how do you value this company, whether it's price to sales and what multiple is good, right? At a year back, 10 times price to sales was good. Probably today, 5 times is not good, right? So it all has a very strong correlation with what's happening in the global market, specifically in the Nasdaq market. So I will be very closely tracking those. Having said that, here we are right now as we speak, we are closely studying all those companies, and we have to see which companies are very close to their path of profitability, and not one-time profitability but sustained profitability. Because end of the day, if profitability comes with a very slower growth, so one should not be giving a growth multiple to those companies, right? Because it's a chicken and egg thing, right? Because high growth was coming with high cash burn, but cash flow is now coming with no lower growth. So we have to find the right balance. So to answer your question, right now we have not yet dwelled into any of these companies, jumped into buying into any of these companies. We are observing them, but I would say very closely watching what's happening to similar companies with similar business model overseas and what kind of valuation cut they have seen, because similar will tend to happen in India as well. But to answer your question, we have not yet gone into dipping those companies.
Okay, not dipping your toes in these new age tech companies. Rupen, one final question. You started off by talking about how you are seeing green shoots about rural recovery, and the evidence you gave is the two-wheeler names, where the November sales have been pretty good for the likes of, say, Hero MotoCorp, etc. But in the auto specking order, you're going with commercial vehicles, passenger vehicles, and then two-wheelers. Why is that? Why is it that you're not betting on two-wheelers where there is that rural recovery tailwind?
So Rima, probably in a very short term, tactically two-wheelers will do well. But if I were to take a more medium to long term call out there, so here probably within all the segment, two-wheeler is the segment in which the EV threat is for real, and we are seeing a big growth in or rather huge EV penetration in the two-wheeler side. So there, the incumbent, the leader in the two-wheeler probably has not got on, full on into the EV game out there. So that disruption is very much there in play in two-wheelers, which is of course there in four-wheelers or passenger vehicles as well, but probably it is some time away there. So in the very immediate perspective, 1-2 quarters, probably two-wheelers will outperform, but over next, say, a year or two, we continue to have our preference towards a passenger vehicle, and the CV cycle definitely is also will be strong for next year or two.
Rupen, this has been a rich, insightful conversation. Thank you very much for joining in, and have a very good day. Slip into a break on that note. On the other side,